Welcome, everybody, to the Investing or Gambling Podcast. I am your host, Ileana Mike, and I'm here with a very loyal co-host and now guest of my show, Dow 30K, aka Colin. How are you today, Colin?
Good. Happy earnings season.
Yes. It's going to be a big earnings season coming up right now. We've got all the big tech earnings coming up. The Dow Jones Industrial Average at 35,061. The lovely NASDAQ sitting at 14,836. And our S&P all-time highs here, folks, 4,411. The Russell 2000 is 2209. We have bonds. 10-year bond is sitting at 128. And we have some big earnings coming up. We're going to talk about the Facebooks. The big tech earnings are going to come out this week. Apple, Amazon, Facebook, Google, all of them. Tesla tomorrow night. What's going on in the market? How you been doing, Colin? Let's give a little shout out to my buddy Colin here. Colin, what do you think's going on?
Pretty much, I think we should be fading the media always.
Okay.
Monday, I think they kind of embarrassed themselves there. Even if you are a bear, I don't think they gave any good reason on why the markets were selling off.
They said it was COVID.
You and I would said, yeah, they said it was COVID. Okay,
Delta
so you're
variant.
talking about, yeah. So last time I checked, we have a vaccine and we have therapeutics coming out. So that was really silly. And I think so in sports betting, you fade the public. That's like the thing to do. And with investing, I think you should fade the media. To be honest.
You're absolutely right. That day, I think it was Dr. Scott Gottlieb, who
they had him on, right?
Yeah, he was the one that really tanked the market, saying it's getting bad out there, and he was all over CNBC. And I think what happened was that the market, you're right, people are not believing media, and they're not believing people that they see like the Fauci's of the world and the Dr. Scott Gottlieb's of the world. They're saying, wait a minute, why am I vaccinated and I have to wear a mask? And they're saying that I have to be worry about a Delta variant. Is this thing ever going to end? I got my vaccine. You told me that it was, effective. And,
right.
And I've had COVID. The other people are saying, I've had COVID. You told me that I had good antibodies. So I'm just as, now I get it. The people that aren't vaccinated, and I would say that that's their choice to be unvaccinated. If they want to, they can choose to do what they want. I still believe that we have freedom here in America. But you're right. I think that investors saw that opportunity to take advantage of it. Now, I think it's a little overblown, the market, but we're going to see. Now, you got to understand that 88% of the S&P that has reported have beat all estimates. All right. Now, these estimates to me were at lower bars. It's easier to beat the bar than it is to, when you've got a low bar set against you.
Absolutely.
I did see a piece in Bloomberg and I sent it to Marco. I'm shouting out to you, Marco. You got to talk to me, bro. If you're listening to this podcast tonight, you got to talk to me once in a while, bro. I want to have you back.
He's busy.
I know he is. He's not a big believer that the bond market is smarter than stocks, and neither is Josh Brown. And I'm not going to totally disagree, but the bond market plays a big role in what happens in global economies. I'm sorry. Bond market is saying that we're going to slow down. And the bond market is predicting this. Not only that, but the Fed keeps buying $120 million worth of bonds every month too. So they're keeping the yield down too. That's their way of saying we don't have to raise rates. And even if we do, we're just going to keep the bond yield down. I think that we're going to have a little bit of volatility. I also think that they better stop talking about this COVID business. They better stop talking about it because people will start, my wife just came back from Vegas last night. She said it was wall to wall to wall people.
Mm.
She says, I've never seen it like this. Now, granted, it's mid-July. a lot of people don't like going to Vegas in summertime because it's very hot there. She said people were there wall to wall. They were spending like crazy. They didn't care. And I think this has a lot to do with all the money that's being floating around in the market and all the money that's being floating around with this new child care that they're giving out. I also feel that there is so much stimulus in the market that it is going to explode. When, I couldn't tell you if it was tomorrow, if I couldn't tell you if it was next year or the year after. I couldn't tell you that. What I am saying is that, you know, we've always talked about the type of investing that you do. And I always bring that up because, you know, in my monologue or in my thing that I tell people why I do this podcast is to help younger people. All right. Even though I think that the millennial generation has a lot to learn and they're a little bit sassy and they're a little bit over, you know, confident in themselves, which is fine. But, you know, you don't use it as a gambling tool. The market is not something that you can get rich quick in. It's not made for that. It's only made for the get rich quickers who have access to the Goldman Sachs of the world, the Morgan Stanleys of the world. Those are the people that know how to get, you know, they manage money. So they have a lot. The market is not made for per se, the retail investor.
Well, really what's the quote Warren Buffett said, or somebody said? It's a transfer of the inpatient to the patient or something.
You're right.
You know what I mean?
Yeah.
I can't remember the quote, but it was something like that.
People need to keep in mind that when you are investing in the market, your best alternative is to not trade the market, but to invest in companies that you like. Do your due diligence on them, do some research on them, make sure that they're good companies and you know that they're going to be around for the next 20 to 30 years.
Yeah, even time if frame is a huge part of your is a huge point of this. And
Absolutely.
I just think I started hearing on CNBC halftime, probably within the last year, they have these longer term investors that are buy and hold people, and they are starting to bring up time frame a lot more. But CNBC, I mean, they never used to talk like that. It always used to be a show for traders.
Well, they're still the pump.
They still have tons of traders.
Oh yeah. Oh, absolutely right. Those guys get paid big money.
Yeah, they're literally talking to two separate crowds, and somebody that's just getting into the stock market may not be able to distinguish the trader versus the long-term investor.
Exactly.
So that's why another reason to fade the media or shut off the media sometimes, because you know, you're really getting a lot of polluted information.
Yes.
And maybe you want a certain part of your portfolio or a certain part of your wealth or certain allocation to just trading. That's fine. But you got to be really strict and have rules and not keep adding to that account because you're going to be losing money maybe.
Right.
So there are rules, and you are helping young people invest for the long term, I think. So I just wanted to add time frame. If you're in your 20s or your 30s, you should be buying and holding companies. You really should.
Good companies.
Good companies. Yeah. You're not going to get a home run every single time. You may not pick a good company. It's going to happen. Not every single company you're going to buy is going to be a great company. You might screw up once or twice, but if you're diversified and you're buying a pool of companies, most of them are going to do well in the long run. In the long run.
And you may get a year or two. You could get a year or two where things just don't. You could get another recession, very much. We could have a deeper recession than we had before. That recession per se that we had with COVID, they claim it only lasted 2 months, which is not really a recession. Normally you get a recession that lasts for at least a year or two. Okay. And, you know, is there another one coming? I don't know, but it would be a great opportunity for younger folks to, you know, you put $100 or $200 into your portfolio every month. That's not a lot, but over time, you know, that's the way to do it. They got it. There's too many gamblers out there right now. There's too many Bitcoiners out there. There's too many crypto things. There's too many things to invest in that just make it so hard. All these SPACs that are coming out that make no money. You know, I get it. The other day when I saw Blue Origin go up to space, or it was an 11-minute flight. They spent about 2 minutes up in space. Now, don't get me wrong, like Virgin Galactic, people are saying, oh, we're all gonna, no, Virgin Galactic will never make any money, folks. I mean, it cost you $250,000 to go up for 11 minutes.
Mhm.
Okay. That's not something that everybody needs. Apple
Yeah.
is something. Apple is no longer an iPhone company. It's a
Yeah.
utility. And what I
Yeah,
mean
I
by
have
that
to.
is you need that company. You're
So
not going to go without it.
I have to disagree with you on space, only because I think it's a distraction. I think that a lot of this Blue Origin, SpaceX, and Virgin Galactic, a lot of their revenue isn't going to come from tourism. I think the only reason why they're doing this tourism crap is because it was a way around NASA and having the government involved. It was the only way to have a private market entrance into exploration. So where the money is going to come from in the future, not tomorrow, but in the very long-term future, is going to be from the satellite business, the imaging,
Oh, yeah.
the exploration. And this tourism thing, as neat and fun as it is, I really truly think it's a distraction to the story of space
Right.
exploration. I mean, that's big bucks. I mean, governments are going to
Oh,
be
I
spending
agree.
huge dollars
Well, that's what they started.
on a
Trump
lot of
started,
this imaging.
not to get political, but Trump started Space Force.
100%. You know who did and who ended it was Obama in 2011.
I know.
Yeah. So it's good that we have
No,
this
I agree with
going
that.
now, because it's
I'm a
really
big,
important, probably,
I'm a
to our
big,
future of the.
I'm a big
Yeah.
SpaceX fan. I'm not an Elon Musk fan, but I'm a big, no, I'm not. I think he's too charismatic. I just think that I think he needs to stop with the Bitcoin. I think he needs to stop with all these tweets. I think he needs to
Yeah.
concentrate on what he's doing with SpaceX. I don't know if Tesla's ever going to become, will never
Profitable.
become, no, it'll never, there's too much competition out there. All right. Wait, the automotive business is one of the hardest, just like the airlines. They're the hardest to make. It takes.
I hate the auto industry.
I know,
really
I
do.
know, I do too. I don't think that's.
I hate Ford. I just
I don't.
have no interest in investing
No, I get it.
long-term in cars.
I get it. Now, you're right. If SpaceX came public, that would be a company that I would definitely invest in. I think them, maybe a few others have a big upper. I do agree with that one.
Yeah.
I think
and then he's got that
more military.
Yep. And then he's got that other division of SpaceX which is the internet space company. I can't remember the name of it. Starlink. Yeah. Yes. So that may come public instead of SpaceX. Who knows?
Yeah.
But I wouldn't dismiss Virgin Galactic because of the tourism aspect, even though I think it is cheesy, and I'm agreeing with you.
I don't think that'll ever fly.
I think
no pun intended.
I think it's a distraction. I really do.
I think it's just more of CEOs trying to make money off of their IPOs, that these SPAC deals. I don't think that.
Deals,
yeah, that's what
I mean. There are. I still like a lot of the SPACs that actually merged. I can tell you that some of them are going to fail, some of them are going to suck. Yeah.
Right.
But I still like a lot of them. Like DraftKings is a great example.
Oh, I like DraftKings. DraftKings is a little expensive, but eventually DraftKings
was a SPAC.
Yeah, I understand that.
You can't dismiss SPACs.
No. But that's something that everybody, that's something that millions of people can get involved in. Millions of people will not be going to space. Sorry. So forget about it. Tourism and space.
Millions of dollars.
Breaking up. Sorry, folks, a little
But
technical.
millions of dollars will be spent.
Hello.
Millions of dollars will be spent on paying for that imaging.
Yes.
From a SpaceX and from you know what I mean?
Right.
Yeah, my internet sucks.
So what do you think about the upcoming earnings that are coming out by all these companies? What do you think about Facebook? What'd you think about, we got Apple coming up, we've got Google coming up.
Well, I think
Amazon.
a lot of it's I think of a lot of it may be noise, because you kind of mentioned it earlier, is that earnings has seemed to be a little manipulated this year.
Yeah.
Or this quarter coming up, where either Goldman Sachs or whomever are giving these forecasts and they're lowballing so it goes higher, or you're comparing it to year over year, and you can't
Right.
compare year over year with a COVID
No, you can't.
catastrophe.
Yeah,
So
not at all.
yeah, look, I'm sure they're all going to do well. I'm sure Microsoft and Facebook, we know Facebook's growing.
Those are all some
just-
fabulous companies. I'm not a Facebook fan. I do not like their policies, but I'm not saying don't invest. I wouldn't invest in Facebook. That's just me.
Well,
But I'm
it's a
not
$1
saying
trillion company.
I get it. I'm
Do you
not
want
saying.
to? Do you want to buy a
wouldn't
$1 trillion company right now? Maybe buy something that's less than 20 billion market
Yeah,
cap.
I
that
think
could
a
also
lot of
be
these.
disruptive.
You're right. A lot of these companies, the easy money's been made. I think a lot of the easy money's been made.
Yeah, they're
is
like
exactly
blue
that.
chip, steady.
Right now,
Yeah, they're not
right.
going to
Facebook
grow
is,
like crazy. Yeah.
right, exactly. Like the Apple. Now, Apple's one of my favorite stocks to put in your portfolio. I like the defense names because I think they're going to start getting a little bit. I think we're going to start getting a little bit more. We always need defense. We always need defense. I like all the utility companies. I like energy. Those are things that I like, things that are never going to go away. Railroads. I like all that stuff. I like trucking. I like freight because I believe that that's not going to go away. I think all this talk about Green New Deal is going to be completely washed away at some particular time because they're going to realize that we cannot do without the fossil fuel industry in this world. We just can't. And we don't want anybody getting ahead of us as we continue to, if we continue to stay on this path of no fossil fuels, we will be the ones that will be looking back in our economy. We will be looking, we don't want that. We want a balance.
Yeah. I agree with you on this, actually. Now I have to pat myself on the back because I think like 2 years ago on a show, I was pumping Shopify.
Yeah.
And Shopify at that time I was pumping was a $20 billion market cap company. And today it is a $200 billion market cap.
Mm-hmm.
It's the 54th largest company in the world.
As per market cap.
As per market cap. And, that is boots on the ground because, I'm in the industry, the retail industry, and I saw how disruptive Shopify would be in terms of my industry, which is the grocery store chain world. It's not my industry, but I do some work in that field.
Right.
And I remember saying Shopify, it's going to be big. I'm telling you. And that was boots on the ground.
Right.
So a lot of your lessons to younger investors are don't be afraid to open your eyes and take a trip to Vegas. Or I went to Austin, Texas.
Yeah.
And I went to Austin, Texas like 6 years ago. I go there often, but I was there 6 years ago. And I remember seeing everybody had Square point of sale at the cafe, at every single cafe.
Yep.
They all were using Square.
I was using it back years ago too.
Yeah.
In my business.
And yeah, so I bought the stock 6 years ago. I'm up 500% today.
Oh yeah.
Boots on the ground. I saw it with my travels.
Right.
So, I think it's okay to own the Facebooks of the world and the $2 trillion, $1 trillion companies today.
Right. No, it's just not for me. I'm just saying, right.
Yeah, but Apple, I think you should have a position in QQQ. That's really what I'm trying to say.
Right.
Because that's a market cap weighted index, but you should
Google,
also
same way.
Don't be afraid to look at companies with a market cap under $20 billion that you understand, that if it's either boots on the ground or and you can wrap.
Hello.
And still there. I think that's where bucks are made.
Right.
Yeah, I keep getting cut out.
Yeah.
I think that's where the big buck made. And just keep in mind that, somebody mentioned that 10-year returns were at like the peak today.
Yes.
So like over a 10-year period, if you were buying Amazon in 2012, you'd be up 15 bags.
Right.
You'd have a 15 bagger. So keep that in mind that we went through a period where that was very incredible. You might not see those gains over a 10-year looming period.
Exactly.
But it's okay to still be long-term if you're young and grab some of these companies Like, I'm going to give you a few. These aren't stock picks,
Go
but I'm
ahead.
just going to give you a few examples. DraftKings is a $20 billion company.
Mhm.
Sklz, SKLZ, is a $6 billion company. It could be super disruptive. Okay. HIMS is a $2 billion company. That's telehealth. That's getting your drugs online. That's disruptive. I'm trying to think of other ones.
What's our symbol on DraftKings? DF?
DKNG,
Oh, DKNG.
Sklz. Yep. HIMS is another one. SoFi is a little on the expensive end. It's about $16 billion.
Right.
But these are companies that if you're going to buy and hold for 5 years or 10 years, you could really, really crush the
Sure. In other words, what you're
averages.
trying to say that the other companies, the easy money's been made, and this is where you could be making a little bit more and putting a little bit
And
of
there's
these.
not exactly, and there's not to say that Apple might not be a $10 trillion company one day. It certainly could be,
Sure.
but you're not going to have the hyper growth that you're
No.
having.
Correct.
That you're having with these new disruptive tech companies that were actually merged as SPACs.
Right. But those
most of those I
should
just
be
listed were
probably,
SPACs.
those I would put at probably maybe 20 to 30% of your portfolio if you're young, as opposed to 70% of your portfolio into the
Yeah, always yeah, exactly. Always diversified
right.
too. Yeah.
All right, real
yeah,
quick
go ahead.
before I let you go here, real quick, before we get on with the end here. What are you thinking? What are you seeing? Do you believe that inflation is transitory? I'm going to ask you one more question here. Do you believe that and I'll give you my opinion real quick and we're going to end the show. Inflation. What are you seeing in your industry?
Well, I'm in a commodity food industry, and over history, over a 10 year period, food inflation is pretty sticky. It's not really as transitory as we would hope it would be. That being said, I do think certain things are transitory due to the COVID pent-up demand. But you got to keep in mind that a lot of what we're hearing in the media or from PAL is not realistic. And I would have to just warn people that think it's transitory, that transitory, there's no definition of the time frame of transitory. So it's kind of like a scam thing to say.
Right.
Transitory
right, exactly.
could be 10 years. Nobody knows.
Yeah. 10 years from now, the price of corn could come down to $1 a bushel.
Yeah, I think inflation's super serious. I would be very concerned if I were
too.
PAL. And another thing, like in the 70s, I think we talked about, I can't remember the guns thing, but when people were buying guns so much that it just, what was
back
that?
in the
Guns,
70s, back in the 70s.
what was it called again?
I don't remember that.
But inflation, just so we know
the
what
Carter
happened
years were the worst, when we had so much inflation and shortages, and because they were playing around with hostages and everything back then, and there was embargoes that we put on certain places. But that was because the reason why we had the gas shortages is because we weren't independent, energy independent. If we don't stay energy independent in this country is going to be in some deep, deep trouble. We don't want to depend on anybody for our energy. We have hundreds and hundreds of years worth of fossil fuels in the ground that we can make efficient, that we can get out efficiently. So we have to get off of this. We do have to get off of this, because 10 years down the road, whether you believe it or not, you are not going to see the global warming like they say. You are not. These are predictions that are a little bit way overdone. Okay. And we don't know. Life has only been here for about 4,000 years. It's not been a long time. So in reality, when an Earth has been here for billions and billions, 4,000 is nothing but a split second in time. So don't get all worked up. Don't get all worked up.
What I was going to say, guns and butter. Guns and butter. When you get off this podcast, Google guns and butter.
I will.
And see how scary inflation really could be.
I know.
If we don't get a handle on it, it's what I call a snowball effect. And what that means
like a
is that
tax.
everybody is trying to buy before the next increase. So
Yep.
you have even more pent up demand. That's what the snowball creates.
Right. Everybody wants to
And-
get in on a deal before they think it's going to get worse.
Correct. Yeah. And that's not a good thing mentally for
No.
this country. It really can hurt our country long term.
I agree. Well, we're going to take a look at the market this week, folks. I want to thank Colin for coming on. Colin, you know, I asked you to do the podcast last year and you took complete control of it and you did a great job editing.
Yeah, it was 2 years ago.
2 years ago, correct. I think that we're gonna. I want to have you as a guest all the time, and I've taken the workload off of you. So
I'd be happy to come on once in a while. I really enjoy it. Thank you.
Good. Well, we'll try to have you on at least every 2 weeks or so like that. If you don't mind coming on like that, we can do it that way, whatever you like. You were very informative today about what's going on. I wanted to hear from the horse's mouth, what I call the horse's mouth about inflation. Because this transitory issue, yes, you're right. There are things that are out there that are transitory, like used cars. Yes, they're transitory. Okay. Used cars are not going to be, but we don't know how long it's going to last. I'm seeing where this used car prices and chip. I've talked to some big dealerships, Colin. Okay. I do a lot of work for car dealerships and they're telling me that it ain't going to end for another year to year and a half. Go ahead.
Hey, ask yourself this. When was the last time in a grocery store you saw a price decrease?
Once in a while, I get a coupon in the mail that says
not a promotion. Your Kellogg's cereal is now $2 versus $5. When has that ever happened? You're not gonna. A lot of this is really gonna be sticky. Once big corporations have their margins, forget it. It doesn't come back.
That's
so
correct.
A lot of this stuff is going to be sticky.
In fact, what a lot of places are doing is they're giving you a smaller amount of product. That's another thing. Cereal boxes have gotten smaller. Ice cream
to hide the inflation.
Instead of getting a half gallon of ice cream, you're only getting a quart and a half. Looks like a half gallon, but it's not. Look at the ounces on it. It'll say 56 ounces or whatever. Okay. It's not a full gallon. It's not full. So it's the same thing with everything else. Colin, thanks very much for coming on, folks. Hope you can listen to our podcast tonight. It is investing or gambling, folks. Thanks very much for listening, and we will talk to you soon. Thanks for listening, folks. See you next week.